Welcome to another edition of Inside the Economy. I'm Larry Howes. Thanks for joining me. I want to talk about the housing market, some population numbers, U.S. population, the markets, stock market and bond market, and there is some ancillary stuff in gold and a few other places, and sort of wrap it up on a little piece of input, what the economic input might be and how things with water are going, not just in the U.S., but everywhere. Well, initially, the numbers look pretty good. Well, the Fed didn't lower rates last week. They're probably not going to do anything with that until March, maybe April. Interest rates went up a little bit. Mortgages back 6.1, 30-year mortgage. Oil was at 61 Friday. As of Monday morning, well, it was on its way down again. There is a global glut and demand is down. The job market, unemployment is still at 4.4, not bad. Initial claims are low, even though there's been a lot of announcements, like Amazon is going to lay off another 16,000. I haven't seen any of that yet. And the ISM manufacturing number popped back up into expansion, which after 10 months, it was sort of welcome. But it's really not surprising because U.S. manufacturing is slowly and very substantively picking up. House prices, big thing on affordability of housing. It's a big political issue right now. House prices have come down a little bit. In fact, the top 4 states, interestingly enough, Colorado's at the top of the heap. It's down 3.5% from the peak, followed by California, Texas, and Florida. There's some specifics here in a minute, but when you come down off your peak 3.5% and it's big news, that doesn't have much in the way of impact on affordability. There is no impact on affordability. If it's a political issue, it really has nothing to do with the reality that if it costs $200 a foot to build a house, a used one is not going to be cheaper than that. It's simply the case. So a lot of these markets are adjusting back down, particularly, well, Punta Gorda is the worst. Austin is still coming down. Colorado Springs is on there. Boulder's not on there, but it's right on the list. Pueblo, that kind of stuff. And all the California, Texas, and Florida places. They got a little ahead of themselves. Now they're coming back down. But coming back down means it's really not collapsing. It's stabilizing at a inflation-adjusted number. The labor demand market, I think, is in fact stabilizing. There's a lot of sources for these numbers. The National Federation of Independent Businessmen, one of them, and a few others. Demand is stabilized. New jobs aren't growing, much to the discontent of the media, but they're not. Manufacturing is using a combination of AI and robots and more automation, better automation. That's what the AI is all about. And they are not hiring new people. They're just doing normal shrinkage and moving forward and becoming more profitable. On the people side of things, and this is kind of part of the housing market, we had a big population change when everybody fled the country during COVID, and then a big boom, some of it politically motivated, some of it you want people to work in the restaurants, so on and so forth, and a lot of asylum. Now the population is coming back down. We're not replacing ourselves by natural means at this point. We still have to have, the U.S. still has to have immigration to keep the population positive. I don't think that will ever change. It's just going to be a way of life. And there are some countries that do immigration pretty well, some that don't do immigration at all, like Japan and a few others. But the population numbers aren't disturbing. They're just reflecting that several of the big countries on Earth, Japan, China, Russia, and a few others, are clearly losing population. A few countries, Turkey, Indonesia, Iran a little bit, are gaining population. Well, India and India especially, are gaining population. Everybody else is just hanging on by immigration. The stock market, well, it's been a little overvalued for a little while now, a few months. It's been going sideways. Other markets have been doing better, gold and silver and some of the other ones, Bitcoin. The U.S. stock market and the big and small company market is okay. It's not in a bubble. Earnings are coming in for the fourth quarter right now. We could have another quarter of 12% growth, which won't quite justify where the market is right now, but it's very close. We're certainly not in a bubble. It's just wondering if what might happen here, those of you who remember the technology crash in 2000, that was a biggie. That's the dark line here. And that's kind of where AI and, quote, IT companies are right now. They're really kind of overvalued. Oracle and a lot of those guys, a little pricey. Chances are it's going to correct. Maybe not tomorrow, but it needs to correct because it's out of sync with everything else. When it does, then the market will be, very attractive. Manufacturing isn't continuing to grow, even though manufacturing is getting better. It's just catching up with the valuation they've had for a while. So, the bond market, the yields have been tightening. You've heard me talk about when yields tighten, meaning the yields get close to their same treasury. When a corporate bond, 2-year corporate bond, is very close to the same yield as a 2-year treasury, that means the yields have tightened. Prices are up. There's a lot of confidence in the bond market, certainly the domestic bond market. Muni bonds, corporate bonds, local muni bonds, all that kind of stuff. No bubbles here. It's a very tight, not expensive, but a very tight market that wouldn't mind having the interest rates come down, but it isn't important to them. Rates are fairly attractive right where they are. Stock market is certainly doing fairly well, and the fact that most of the rest of the world continues to buy in the U.S. stock market, well, is sort of indicative of that. There are always emerging markets and a few other smaller markets that come and go, but they're still buying the S&P 500 and everything else they can get their hands on in the U.S. market. And buying treasuries, well, a foreign country would buy treasuries because they have dollars, because people with dollars have been buying stuff from them. Japan used to be the #1 holder of treasuries. Well, most of the money they make from the U.S. customer, that stuff is made here. Their cars are made here, and a lot of their equipment is made here. Their tractors are made here. So that sort of circulates in dollars. Most of Japanese institutional assets and corporate assets are in dollars, mostly in the U.S. They don't buy a lot of stuff and invest a lot of stuff in yen. Everybody else in Europe is sort of leading the pack here since they've been doing more business with us. They have more dollars, so they buy treasuries. The only people that aren't continuing to buy more treasuries is China, because they don't have so many dollars anymore. They're doing their business around the rest of the world. It's just not bringing in as many dollars as it used to. Gold has gone way up. When the dollar, they call that way down. Actually, the dollar has come back down where it ought to be right now. In the last 6 months, it's getting down where it should be. And it's in an environment where the interest rates are starting to come down. Your currency comes down when you lower the interest rate on it. Gold has just been we still have a little inflation, let's buy gold. Well, it's done great. Of course, it started a correction here yesterday. It's not going to collapse. It is reflective of the amount of money in the system and the inflation cycle we went through. Gold has always done that. And the dollar is going to be very dependent upon where interest rates go. Finally, I think it's the 14th of February, maybe the 12th of February. U.S. Bureau of Reclamation is going to take over the control of the Colorado River Compact. The lower states, California, Nevada, Arizona, Utah, tiny bit of Colorado. Because for the last 15 or 20 years, however it's been, everybody's been suing everybody else, trying to come to agreement with how to allocate the water in the Colorado River. It's very likely going to have an impact on California agriculture and some of the agriculture in Arizona. Specifically, I'm thinking about the Indian tribes that have almond trees and the people in Central California that grow almonds. And I'm not picking on almonds. It just takes a gallon of water to grow one almond. They're kind of water intensive. Anyway, the Colorado River is not showing signs of going back to its vibrant glory days of having a lot of surplus water. So since the governments and the politicians aren't able to agree, they're simply going to have to decide, because they can't let Lake Mead go dry. And interestingly enough, around the world, there are some serious water crises. The term is water bankruptcy. Iran is probably at the top of the list of people that are in a critical water shortage. And you don't bounce back from that in a hurry, especially when your infrastructure is shot. Egypt is potentially in a bad place. Everybody else is trying to do a little better with what they have. And frankly, people that are probably doing the best in a very dry and hostile environment is Israel. They have about 92 desalination plants all over the Mediterranean. They pump lots of water from the very beginning of the Jordan River all the way down the country so it'll evaporate in the Dead Sea. They're pretty good at it. UAE and Saudi Arabia are really getting in the desalination business because there aren't a lot of alternatives. The aquifers are drained. Well, anyway. From the economic side, it's going to have an impact, probably a negative impact on California when they resolve who gets water out of the Colorado. And those of us that live in Colorado sort of have a stake here too, because we're trying to fill 2 new reservoirs. Well, one new, one rebuilt. The new one up by Fort Collins, that's going to be water out of the Cache La Poudre. They're going to start filling that pretty soon. And Gross Reservoir is pretty close to starting to be filled. And that's straight out of the Fraser River, an important tributary to the Colorado. And we'll see how interested we are in parting with more water down the, well, down towards California. The thing about water is it doesn't negotiate. It doesn't recover by any means you can stimulate it. And it has a huge impact immediately. Okay, that's enough. If you have any questions, send them along to info@shjwealthadvisors.com. Happy to deal with them. And thanks for joining me.